Some concerns growing around Apple shares this week. A number of analysts, including our next guest, warning of softening demand for the iPhone 16. He believes Apple's cut about 3 million units for the December quarter. That would make it the earliest build cut in recent history. He is Barclays Tim Long. He joins us now as an underweight rating on Apple, price target 186. Tim, the part of your report yesterday that seemed to concern people were you cited supply chain channel checks and 3 million units being cut at a semiconductor component in iPhones. How confident are you that that is true, A, and B, that it will have the impact you think it means on demand?
Sure. Thanks for having me. Yeah, look, we do think we're pretty confident that there have been some adjustments to the build plan here. If you remember correctly, a few weeks after their June event, there was a lot of speculation that Apple was telling the supply chain to build more iPhones for this upcoming cycle. Given all the data that we've seen and others have talked about with sell-through and pre-orders being weak, it's likely that upside that they were hoping for in these devices is not there currently. We're still only a few weeks into this cycle, so certainly things can change, but we do think this upside case that was built in has probably gone away for now, and we'll just have to track to see how sell-through or true demand is tracking over the next month or two. Most indications are we're tracking about 10% down, if not even a little bit more, compared to the iPhone 15 cycle. So it is off to a little bit of a weak start here.
Yeah, I mean, you say in the report yesterday, your sell-through checks point to 15% declines year over year for iPhone 16 in the first week of sales. I mean, kudos to you for doing some reporting here, so to speak. Does it mean this thing is going to be, I don't know, would you term it, a weaker expectation overall for an entrant of a new iPhone than we've seen in some time?
Yeah, it certainly feels that way, particularly because the iPhone 14 and iPhone 15 cycles were basically flat. So we're coming into this with an iPhone installed base that's very old. On average, people are holding phones that are 5.5 years old. So the setup was pretty good into this cycle. The Apple Intelligence features are not out yet. So there is a possibility that when we start to see Apple Intelligence on these phones at some point in October or maybe November when the betas are completed, there might be a little bit more demand. There could also certainly be a lot more promotion and co-marketing from an Apple, maybe with some of the U.S. carriers, maybe some more discounting. So it's a little bit different cycle this time around because we do have a meaningful software feature. For the last decade or so, most of the features that have been added each year are some kind of hardware-based feature, and those haven't really resulted in much change. We're shipping, this year, the same number of iPhone units we shipped about 10 years ago on the 6 and the 6 Plus. So Apple has not really had that killer product in almost a decade. Will Apple Intelligence and these AI features change that dynamic? It still remains to be seen. I think consumers really need to get these services in their hand, try them out, and see if it's something that's worthy of considering an upgrade for their current device.
How much of the stock move and the conviction on the stock story has to do with just the sales of this product, the 16 and Apple Intelligence, versus some of the other bigger picture reasons to own the stock, services and everything else they've got going on?
Sure. There's a lot of dynamics within Apple, of course. I'm a tech hardware analyst. I've covered the space for 25 plus years. This stock has morphed into being looked at in a lot of different ways. But for us, this iPhone is important because there is some AI premium built in, like happens with a lot of technology stocks. So if they can't prove that AI will drive a cycle, that will be meaningful. There is still a lot of regulatory risk here. That is something investors are watching. We should get the initial ruling on the Google DOJ case, which impacts a large part of Apple's earnings through that the tax payment they get. That's a meaningful driver as well. So there are several vectors here. We think this iPhone is very important coming off 2-week cycles with what is, some were expecting to be a super cycle. We don't really expect super cycles. It's pretty rare in smartphone land. So that's why I think it's extra important. But there is still a lot of regulatory, China exposure. There's other things that are getting a lot of attention as well.
Well, finally, I mean, if you're right and this thing's down 15%, let's call it year over year, where's the stock go?
Well, we're using a 25 multiple on the stock. It's currently trading at 30 times. So, we're in the mid 180s for our price target. Again, there's a lot of different constituents owning this stock that are looking at different things. So, and the base of these numbers doesn't move around a ton. So I wouldn't expect units to ultimately be down 15%.
Okay.
But the sentiment could change, certainly.
Tim, appreciate you. Thank you.
Thank you.